Welcome back. You're watching India Tonight, and let's now put the focus on the Indian stock market that's experienced quite a significant fall today, with both the Nifty 50 and Sensex showing considerable declines. Nifty closed below the 200-point mark. In fact, the Sensex also shed around 600 points in trade. Investors and traders are closely watching the evolving global and domestic market conditions as they try to understand the reasons behind this drop. In fact, we try and decode the reasons behind this drop tonight with our guests. Sudip Bandyopadhyay, who is a group chairman, IndiTrade Capital. Thank you very much, Mr. Bandyopadhyay, for joining us here on ET Now. How do you really decode the current market setup, the fall that we've seen today? Of course, after India, Pakistan, the impact that markets were facing, we had sort of, filled that up quite well. But now, again, the fall is pretty spectacular. How do you really read this, and for how long is this going to extend?
Well, I think what's happening is the global markets are extremely volatile, and that volatility, that pressure is building on Indian markets as well. We kept on ignoring that global issues for some time, and the positivity around India-Pakistan ceasefire took the markets up. But I think at some level, the concern continues to remain on what's going to happen as far as the tariff war. Because the pause on the tariff war will come to an end soon. And also the US investors are extremely worried about what's happening as far as US markets are concerned, and the uncertainty around the entire US policy making and US the actions and inactions. Under the circumstances, FIIs are becoming cautious, and they are definitely not in a mood to increase exposure to markets like India. Indian internals, whether it's the inflation, whether it's a monsoon, whether it's an interest rate scenario, does look good, but valuations are not cheap. So combined with the fact that Indian valuations are almost full in most cases, and the fact that global investors are becoming a bit risk averse, we are seeing this kind of sell-off in Indian markets. Domestic investors are also a little cautious in taking fresh positions at current level. This is leading to this kind of correction and lack of major buying interest. We believe that this volatility, this sideways movement will continue for some time. We don't see a clear path for the market to go up significantly in the near future.
Right, sir. So, what should Indian investors now be bracing for, and how should they be tailoring their trading strategies?
Sorry, I couldn't get you properly. Sorry, Sumita.
Sir, I just want to understand, how should Indian investors now be tailoring their investment strategies, given what's happening globally with respect to the US markets, particularly, you have the downgrade coming in. There is uncertainty around the fact that the tariff, the 90-day period, is going to end soon. So how should investors now be tailoring their investment strategies?
Well, from an investor's point of view, who have a slightly longer term view in mind, I don't think there is a need to get too perturbed. There are sectors and segments which are to a great extent insulated from all these shenanigans of the US current administrations. I'll give you an example of a sector like cement. I think cement is one product which doesn't get exported ever. It is a very localized product. And look at what is happening in India. The government of India is committed to spend 11 lakh crore as a part of capital expenditure budget. Now, this obviously involves a lot of infrastructure construction, which does require cement in a big way. So we are seeing a secular uptrend in cement demand in India. Raw material prices, input costs for cement companies have started coming down sharply, and the pricing power is back for the cement makers. Under these circumstances, Indian cement offers a fantastic opportunity from the investor's point of view. And some of the top companies in the cement sector are definitely good buys at this stage, and they are completely away from the tariff war. The other sector I will definitely like to mention here is power. Again, Indian power sector is witnessing a secular structural positive change, and we believe this is going to continue for the next 5-10 years. Under these circumstances, top power producers, top power financiers, top power ancillaries can be definitely looked at from an investor's point of view, from a long-term point of view. There are multiple other opportunities where you don't get into any conflict with the tariff war which is going on, which are pure play domestic, and there is a clear momentum behind these sectors. Investors should look at those sectors and focus buying good quality stocks from long-term point of view.
Right. So you mentioned about power stocks, you mentioned about cement stocks, but what are some of the other sectors that you are currently bullish on, especially with respect to a near-term view? What would those sectors be?
Well, as far as near-term is concerned, and if you for a minute assume that tariff-related issues will stabilize, I am pretty positive on the chemicals, specialty chemicals and fertilizer sector. I think this is one sector which has suffered quite a lot for the last couple of years. Performance also was not good, but I think things are changing as far as the production and consumption demand for these products of these sectors. On the other hand, the China Plus One, which was the original rationale for chemicals and specialty chemicals gaining momentum in India, is back very much, and we believe that we have probably seen the worst as far as chemicals, specialty chemicals, agrochemicals, and even fertilizers. So, people will do well to take bets on these sectors. It's a bit aggressive bet, but from a short to medium term point of view, I think it's a good bet to get into.
Right. But sir, wouldn't you agree that, traders and investors could perhaps already be factoring in the impact of, the tariff war that got started? In fact, the tariff policies of Donald Trump administration when the administration first announced them. And secondly, is there worry really as far as the India market is concerned? Because we do have a robust domestic demand. In fact, the monsoon outlook is great. And of course, on the US-India trade deal front, we're given to understand from several reports that, India and US are likely to agree on an interim trade agreement before July 8th. So do these give any breather to the markets, at least, over the next few weeks?
It does give a breather in a way. I completely agree with you. And that's why we are seeing Indian markets moving in a range. While it does give a breather, we have to remember that it's a breather. So from a long-term investor's point of view, the risks remain till the time this entire thing gets played out. Yes, there are opportunities in pockets, as I was mentioning, and there will probably be opportunities once these things settle down, definitely. I'll give you an example, auto ancillary. I think it's a fantastic sector. Indian auto ancillary companies, at least some of them, are becoming global players, acquiring companies around the world and getting integrated to the supply chain worldwide. They're not catering to the OEMs in India, but catering to OEMs all over the world. Now, these are fantastic businesses which have been created for long term. But unfortunately, this trade war brings a lot of uncertainty. Nobody is sure whether you talk to the specific companies or even the policymakers. Nobody's sure where things will settle, post July 8th. Or is July 8th going to be the day, or is earlier or later? Nobody knows. So while some interesting sectors are there which will probably benefit from all this, but we are not sure what's going to happen. Now look at textile. Now textile, UK-India FTA does give a lot of benefit to textiles. But, one doesn't know what's going to happen as far as US is concerned. That's a large market. So there are pockets of uncertainty. So we are recommending people to get into sectors which are away from these uncertainties. Now, if somebody is a little aggressive, then they can get into pharma.
And these...
Because, while the Trump administration has been talking about bringing tariffs in pharma, the reality is that it is to a great extent impractical because, the cost of manufacturing most pharmaceutical products in US, will be many times more than what they cost today if they are getting manufactured outside of US. Under the circumstances, will those tariffs come? Will those tariffs really impact Indian companies? One is not sure, but most likely it will not. So somebody can look at pharma as well. But today, if somebody wants to play safe, I will still recommend look at pharma companies which have a large business in domestic market and other geographies rather than US, if you want to play safe.
Right. Absolutely, sir. So domestic market is something that will provide shield to investors rather than, those opportunities that are currently impacted by what's happening in the United States. So on the back of that, let me ask you about FIIs. From the data that I have, they sold over 5,000 crores worth of shares today, while DIIs actually bought more, close to 4,000 crores worth of shares. What is your view on FIIs and how will they move over the next few weeks, given the fact that there is volatility in the United States market on account of its economy, on account of Donald Trump's policy? So where do you see the FII movement happening, and how much of them will be moving to India versus some of the other emerging markets?
Well, I think a couple of things we have to understand. One is, as I was mentioning earlier, FIIs are generally becoming risk averse. The reason is in their home market, which is in most cases US, there is too much of volatility, too much of turbulence. And the policy making environment is crazy. One doesn't know what's going to happen tomorrow. So under the circumstances, they are preferring to wait and watch. They are also exiting a lot of emerging markets like India, where the valuation seems to be rich. Now, that's exactly what we are seeing getting played out now. But if you look at the medium to long term, I think what you are alluding to, they will definitely move some money out of US, considering what's happening in US. And whether that allocation will come to India or will go to some other emerging markets, to a great extent depends on A, how Indian markets and Indian companies perform, and B, what the kind of valuations they get in India vis-a-vis other markets. As things stand today, I think if you look at Chinese market, the valuation definitely seems significantly more attractive compared to India. But China has its own limitations. China has its own challenges as far as FIIs are concerned. So whilst some opportunistic FIIs are definitely looking at China and moving money out of India, out of US to China, by and large, FIIs are generally positive on India. They are booking profits, they're exiting from time to time, but they are coming backwards. And I strongly believe that that trend is going to continue. And if we get our act right, in the sense that corporate performance keeps improving, we are going to have a good monsoon this year. Interest rates are coming down, inflation is down. So under these circumstances, if Indian company starts performing and the valuation catches up with performance, I think we will see a flurry of FII investments once again starting to come into India in the near future. So there is no need to think that FIIs are deserting India. FIIs will be in India and they will come to India. They will have more reasons to come to India than probably they had last year, as US market was performing exceedingly well last year. Whereas now US market is a question mark and money will move to emerging markets like India.
Absolutely. So you're bullish on the India market. This, FII selling is perhaps a blip, is something that you're hinting at, sir. But the long-term story of India remains intact, given the fact that we have a robust domestic demand that's going to fuel this rally. We'll have to see, what kind of hiccups come in the way of investors in the near future, and how much resilience will the India market show. Well, on that note, sir, thank you very much once again for joining us here on ET Now. Well, let's shift our focus, ladies and gentlemen, and look at some updates coming in on Operation Sindhur's global outreach as well, which is currently underway. Now, 3 Indian parliamentary delegations have hit the ground. They have taken India's anti-terror message to the world, from Japan to the UAE, now Europe. JDU's Sanjay Jha leads the charge in Tokyo. Shiv Sena's Srikant Shinde takes the message to Abu Dhabi, and DMK's Kanimoy is leading that charge in Europe. The message is loud and pretty clear. India is building global consensus, and Team India's task is cut out. Let's listen into what Shiv Sena MP Srikant Shinde and JDU leader Sanjay Kumar Jha had to say about that visit. In fact, both of them are leading those delegations, and about the discussions that took place during the all-party delegation visit to Japan and UAE.
कि ये जो हमले हुए पहलगाम पर इनोसेंट लोग उसमें मारे गए, और ये आए दिन हमें इन्हें ज़्यादा समझाना नहीं पड़ा कि किस प्रकार से हमले हुए। इतने सालों तक हमले जो है भारत पर होते आए हैं, मुंबई टेरर अटैक्स हो या पठानकोट अटैक हो, पुलवामा अटैक हो, उनको सारी खबर पहले से ही थे और एक स्ट्रेट मैसेज उन्होंने दिया है कि ऐसे टेररिस्ट ऑर्गेनाइजेशंस को या टेररिस्टों को पनाह देने वाला देश, उनके साथ हम कदापि खड़े नहीं रह सकते। हम टेररिज्म के अगेंस्ट में हैं और हमें साथ में आकर, ये भी एक मैसेज उन्होंने दिया कि हमें साथ में, सभी देशों को साथ में आकर इस टेररिज्म से लड़ना बहुत ज़रूरी है।
हम लोगों ने जो इंडिया का केस है, जो बात है, बड़ा ही मजबूती से रखा और उन्होंने अप्रिशिएट किया इसको। दो इम्पॉर्टेंट बात उन्होंने जो कहा, एक तो कहा कि टेररिज्म के खिलाफ बिल्कुल एक्शन होना चाहिए, ये ख़त्म होना चाहिए। और दूसरा उन्होंने कहा कि जो इस घटना के बाद जो इंडिया ने उसको अप्रिशिएट किया, जो रिस्ट्रेन शो किया, जिस हिसाब से बिहेव किया और रिस्ट्रेन शो किया, उसको उन्होंने अप्रिशिएट किया और उन्होंने हर एक तरह से आतंकवाद के खिलाफ इंडिया के स्टैंड को सपोर्ट किया।
In fact, just a month after the barbaric terror attack in Pahalgam, stern comments are coming in from Prime Minister Narendra Modi. He lauded the Indian armed forces and said that we destroyed Pakistan's terrorist hideouts in 22 minutes. He added that India will give a befitting reply to any terrorist hit on the country, and India is not afraid of any nuclear threat or any nuclear saber rattling. In fact, his comments come in after he laid the foundation stone and inaugurated multiple development projects worth over 26,000 crores. Let's listen into what he had to say.
22 अप्रैल को आतंकवादियों ने धर्म पूछकर हमारी बहनों की मांग का सिंदूर उजाड़ दिया था। हमारी सरकार ने तीनों सेनाओं को खुली छूट दे दी थी। और तीनों सेनाओं ने मिलकर ऐसा चक्रव्यूह रचा कि पाकिस्तान को घुटने टेकने के लिए मजबूर कर दिया। 22 तारीख के हमले के जवाब में हमने 22 मिनट में आतंकियों के 9 सबसे बड़े ठिकाने तबाह कर दिए।
Well, that's Prime Minister today in Rajasthan giving out a stern message to Pakistan and global leaders as well, to other countries as well, as far as India's stance on terrorism is concerned. But let's move on to a final story of the day before we end the show. Well, in a major move to tackle the growing parking and traffic issues in Mumbai and across the MMR, Maharashtra's Transport Minister Pratap Sarnaik has announced that new vehicles will not be registered without proof of an allocated parking space. Buyers must now furnish a certificate from the local civic body confirming that parking allotment. My colleague Anurag Shah has more details on that story. Anurag, what are you picking up?
If you are planning to buy a new car in Mumbai or Mumbai metropolitan region, then dedicated parking space certificate will be required. According to Transport Minister of Maharashtra Pratap Sarnaik, government is planning to come up with a policy where parking certificate from civic authority will be required for the registration of four-wheeler because government, according to Transport Minister, traffic is increasing on roads of Mumbai and other cities of Maharashtra, and vehicles are parked on the roads, both the sides of the roads, which is creating issues. So Maharashtra government is planning a policy where after having a dedicated parking space only, the vehicles will be registered. So in this regard, government will make sure that developers will give a proper parking space for the houses, flats they are selling. Government will also come up with a public parking space also, and after the dedicated parking space certificate only, new vehicles will be registered. The same concept was started in a city of Chennai also, and now Maharashtra is also planning to have a parking certificate for registration of new vehicle to decongest the roads, to decongest the vehicles running on the roads.
Absolutely, Anurag, a much-needed rule given the kind of congestion that we're seeing in cities. Thank you very much for bringing us all of those updates and filling us in with that latest information. Well, ladies and gentlemen, with that final story, it's time to wrap the show. Hope you liked the show as much as we did putting it together for you. From me and the entire team, goodbye and thank you very much for watching.